One of the biggest problems for those that are planning out their real estate investing empire and how they're going to grow their portfolio is inevitably, eventually, you realize that you cannot just continue using the conventional rental property financing that you're used to. Typically, these are Fannie, Freddie Mac loans, and they rely on your debt to income ratio, and they're also capped at only 10 per person. So because of those reasons, you really need to have a solution if you want to have more than 10 properties. So let's kick it. What's up, everybody? Mark Yancich here, and as I mentioned, we're going to be talking about a different kind of loan, one that allows you to get more properties than just 10 that are either Fannie or Freddie, or ones that don't require your debt to income ratio to be the qualifying factor. As you might know, a lot of typical residential loans, they rely on what's called debt to income ratio. And what that means is they just look at the difference between how much money do you make and how much money do you have to spend because of debt every single month, and then that becomes a ratio. And if you have to spend too much money every single month, you might not qualify based off of your income and that debt. You might not qualify for a loan. And so wouldn't it be cool if you could forget about the debt to income ratio and have the property that you're trying to buy be the thing that qualifies for its own dang loan? This is called a cash flow loan, or also known as a DSCR, or debt service coverage ratio loan. And these are amazing products. Essentially, the whole point behind these loans is like, hey, if you have experience in buying rentals and homes and you live in a primary residence, there's a certain level of trust that's a little bit higher with you as a borrower. Like, this isn't your first rodeo. Why not pass the buck of the qualifying responsibility onto the property you're trying to purchase? Because presumably you are already trusted at a certain level. So now all you need to do is you need to find the right deal, right? This doesn't mean that you can't be smart about real estate investing all of a sudden. It doesn't mean that you can go into all sorts of bad debt all of a sudden. It's still important to find a cash flowing property. But here's the nice thing is once you find that property, you can get a DSCR loan, which basically, like I mentioned before, will look at the cash flow and see if it can cover the mortgage. And if it can, boom, you basically qualify. There are some other nuances, but that's the gist of it. And this way you can continue acquiring more and more and more properties and grow your real estate empire, basically indefinitely. Now make sure you watch through this because I'm about to describe some of the criteria required to get this loan, and then I'll also describe certain ways that you can use it to your benefit. The first thing you need to know about these loans is you can go as low as 15% down on them, not necessarily the traditional 20. However, as usual, if you put more down payment on a property, you'll probably be able to get a better interest rate. And this is absolutely true here. If you put 20% or more, you will get a better interest rate. The second thing you need to know is that the minimum loan amount is $100,000. So not the property purchase price, but the loan amount has to be at least $100,000. The third thing you need to know is that your credit score has to be at least 620. So this is a piece where it still kind of ties back to you as needing to be a responsible person, right? At least debt to income ratio isn't considered, but your credit score still does matter. And the higher the credit score, the better terms you will end up getting for sure. The fourth thing, and this one's really cool about these, is not only can you use it as a purchase, you can also use it as a refinance loan. Oh, and actually, you can also use it as a cash out refinance loan, up to 80% loan to value. So if you buy something with cash, for example, and you put a lot of sweat equity into it, turn into an amazing rental property that the value of which is boosted because of all the work you put into it, the renovations and whatever, you can then apply for this DSCR loan and cash out up to 80% of its value. So this becomes super powerful when you're trying to scale your portfolio and you're working with, let's say, wholesalers, and you are a person that wants to do a bunch of BRRRRs, right? And for those who don't know, BRRRR stands for buy, renovate, rent, refinance, repeat. Okay, so if that's your game, this is perfect. The fifth thing you need to know, and I mentioned this before, is you need to own a primary residence, and you can't be a first-time home buyer. It's very important that you have shown that this isn't your first rodeo, essentially. And last but not least, and again, I kind of alluded to this in the beginning, is your income is not required to qualify for this loan. Debt to income isn't required to qualify for this loan. All that matters is that an appraisal is done based off of the long-term market rate rents in that area for that type of property. And then you just need to make sure that the rent can actually cover the mortgage. And boom, basically you qualify. Here's another reason why that's really, really powerful is as you step away from being a potential W-2 earner and you move into being more entrepreneurial and maybe even real estate or whatever entrepreneurial venture is your full-time gig, it becomes more difficult to qualify for properties based off of your own income because a lot of times you want to deduct as much as possible and it's hard to show that you actually are earning enough income. Even though you might have money in your pocket, you might not have money on paper. And so for that reason, this product just is so fantastic because not only do you just have to be a smart real estate investor and find cash flowing properties to qualify for these loans, you can also do this even when you're no longer in your primary W-2 job. Or in a lot of cases for our group, right, you don't have to necessarily be in the military anymore and you can still qualify for these loans. So again, this was all called a cash flow loan or a DSCR loan. And this video is short and sweet, but I hope it painted a picture of what is possible and how quickly and effectively you can scale your real estate empire with this product. If you want to learn more about it, and if you want to reach out to our team that specializes in DSCR loans, reach out to us at activedutypassiveincome.com/connect and just fill out the super easy form and you'll be connected that day and you'll be off to the races. All right, everybody, Mark Jan Sitch with Active Duty Passive Income is out. Take care. Bye.